Welcome to the 26th installment in Trading Strategy Guide's Trading Education Series. I'm going to tell you everything you need to know about brokers. Well, most everything anyway. Stick around. Hi, this is Tim from TradingStrategyGuides.com. Thanks for coming back for this installment of our Trading Education Series. Today I'm going to tell you all you need to know about brokers. Mostly, I'm going to talk about Forex brokers because they are far more devious and mysterious than stocks and futures brokers. And be sure to stay until the end of the video and I'll show you the Dreamtrade for this week. And away we go. Every time that you buy a stock, the price of that stock would be the same no matter which broker you bought it from. You may recall my mentioning this in prior videos. The reason this happens is because the stock market field is strongly regulated and the prices are obtained from one central exchange, such as the New York Stock Exchange. In the Forex market, it works a little bit differently because the prices are not obtained from one central exchange. Instead, they are derived from the interbank market. The interbank market is a conglomerate of various banks and financial institutions that provide prices for currencies to various different brokers around the world. The prices provided by these brokers will vary depending on the relationship between themselves and the brokers. So obviously, the better the relationship, the better or the cheaper the prices are. So what is a Forex broker anyway? Well, a Forex broker is simply a vehicle that gives individuals like us, by the way, we're known as retail traders, gives individuals like us access to the markets. It's an intermediary or a middleman that facilitates your trades, both the buy and sell orders, between you, the retail trader, and the foreign exchange market. Usually they are licensed and regulated by national regulatory bodies. A Forex broker will charge their clients a commission or fees or a spread, sometimes fixed spreads, sometimes variable spreads, depending on the type of your broker. They may even charge you a combination of commission and spread. You should just consider this the cost of doing business with your broker. It is important to note, however, that different brokers have different levels of engagement with their customers. There are two basic types of Forex brokers. You have the dealing desk brokers, also known as market makers, and you have the no dealing desk brokers, which can be further divided into three separate categories: ECNs, ECN plus STP, and DMA. Now, the ECN and STP brokers are transacting your trades directly into the market or with their liquidity providers. A liquidity provider would be a larger broker that can ensure more liquidity or volatility in the market. On the other hand, some brokers are going to make their money by taking the opposite side of your trades. These bad boys are the dealing desk brokers. These types of brokers are trading against you, their client traders. So guess what that causes? Yes, that's what I would call a conflict of interest, because when you win, they lose, and vice versa. So they have a vested interest in making sure that you lose. Plus, they have a certain amount of leeway in manipulating the market by dynamically changing the spreads and so on. So, guess who's going to lose more often? Well, let's just fall back on gambling rules. The house always wins. A dealing desk broker will be holding your trades on something called the B book. This means that they sort of manage their trades internally, usually through a dealing desk. Generally, when a broker is using a B-book approach, then they'll do all sorts of internal controls to manage their risk, to hedge their positions, and to make sure their volumes are balanced and so on. They do this also to reduce their risk of losing money. When a trader starts becoming consistently profitable or starts trading really large volume, this presents a bit of a problem for a dealing desk broker. And in this situation, they run a different book called the A book, where they place the profitable traders so they can either hedge the whole A book or simply send the orders coming from the A-book directly to the interbank market. Now, lastly, amongst the no dealing desk brokers, we have the DMA environment. Multiple banks will feed quoted prices to the DMA broker. The DMA broker will aggregate these quotes and select the best available bid and ask price, which means you'll have the best available spread. So in other words, the client will be sending his orders directly to the interbank market, and you'll be having complete transparency on who is on the other side of your trade. So how do you even choose a Forex broker? There are so many Forex brokers to choose from, it's become a difficult task to know how to select the right broker. The most important point you need to look at is regulation. If you want protection and assurance, then you need to check, first of all, that your broker is regulated. Your broker can be regulated by a shady jurisdiction, which we recommend to avoid, of course, or they can be regulated by big financial institutions which have bigger resources and strict financial requirements, like the UK Financial Conduct Authority or the USA's National Futures Association, or the CFTC, the Commodities Futures Trading Commission. These regulatory bodies are more trustworthy, and their umbrella of regulation also has more integrity. One caveat here: even though your broker may be regulated, it's still possible to lose some of your account in the case of a broker failure. I lost a portion of an account a few years ago when a U.S. regulated broker failed. It wasn't a huge loss, but it was still painful. My recommendation is the old adage, don't put all your eggs in one basket. I suggest you spread your investment money around a bit to several brokers. Then you don't lose your whole stake if one of them takes a dive. Remember, your first job is to protect your trading account. Understanding the business model of your Forex broker is the next thing you should be looking for. This is really important, especially if you're going to be trading large amounts of money. In general, you want to choose brokers that are not going to trade against your positions, so you'll want to avoid dealing desk brokers. A non-dealing desk broker has a vested interest in you doing well, because the more you're trading, the more money they're making from commissions. So they're on your side in this situation. Another criteria for a good Forex broker is a broker that's regulated by a jurisdiction that offers some kind of deposit insurance. So in case your Forex broker does go out of business, you'll at least get your money back. And last, but far from least, you should look for a reliable speed execution. Trading in fast-moving markets such as the Forex market means that you want to be able to enter and exit the market quickly. Any delays can either cause you to miss a good trading opportunity, or even worse, it can make your losing position even bigger if you can't exit your trades instantly. In summary, do your homework when you choose your broker, but don't obsess about it either. It's pretty easy to open an account with a broker, transfer money in and out, so changing brokers midstream is not a huge deal. Once you're comfortable with the broker's details, you may want to start with a smaller account in several different brokers and see which ones perform the best before committing to a larger account. And like I said, spread your money around a bit, just for safety reasons. That wraps our discussion of brokers today. It also wraps the foundational module of the Trading Education series. Next week, we'll start talking about methodology, and more specifically, we'll begin our discussion of technical analysis. For now, let's take a look at the Dreamtrades. Dreamtrades is a new service from Trading Strategy Guides that I've been testing out for a few weeks. Just a quick overview, Dreamtrades shows you selected stock issues that meet the Dreamtrades criteria. The stocks are selected by their trade volume and other fundamentals, and also by the price with respect to the three moving averages, the 50-day, 150-day, and 200-day simple moving averages. This is the Running with the Bulls page for potential buy trades. You'll see that there's also a Sleeping with the Bears trade for potential sell trades. Now let's take a look at our prior week trades. AUB popped up and hit our trailing stop on Friday for a profit of 5% on this one. I'll take it. I'm done with AUB for right now. Arcosa Inc. or ACA finally triggered on Monday right here with the candle close above the 50. The volume was kind of wimpy, but the move above the 50 was definitely decisive. So I bought it at 45.63 with my first target at 47.91, which is a 5% gain, and my stop loss of 43.35, which would be a 5% loss. When the price hits the first target, I'll move the stop up to break even and move my target up to the plus 10% profit level, at which time I'll pull the stop up to the plus 5% level and so on. Last week's Dreamtrade, B2 Gold or BTG, is still just fiddling around the 50 right here. Still no trigger. We're looking for a candle close above the 50 SMA with a volume spike to match it for a buy signal. As I've mentioned before, I'm recording this video on Tuesday afternoon. It's currently just before 3 p.m. New York time. Today the problem is that all the stocks from the Dreamtrades list are already about to trigger with really nice setups. There's only one of the trades that's iffy about whether it will trigger today. It seems like it will close above the 50 SMA, but it's not a decisive break of the 50, and the volume is woefully lacking. We'll take a look at that shortly, but first I want to show you some of the charts for these other Dreamtrades calls so you can see what I'm talking about. I'm just going to start at the top of the list and show you each chart in turn so you'll see what I mean. So you see on the left here is the Running with the Bulls page, and on the right hand side is the chart. I'm just going to look at each of these at one after another. Here's AFMD, the first one on the list. You can see that this is a fairly nice break above the 50. The volume is a little bit slack. CALX. This one is pulled back, so this might be a good call. Lots of volume here though, so that volume could be behind the pushing this move down back below the 50. So I'll take a look at that shortly. CDXS. Here's a nice decisive push above the 50. CONN. Again, another nice decisive push above the 50. COUP. Once again, all these hard up above the 50. DT. There's still over an hour of market left. This one has better volume and is moving decisively above the 50. EBS. This one's good volume and nice move above the 50. I would jump on this one for sure because it's been moving up and lots of volume on this up move. Now keep in mind this is all on Tuesday afternoon, so by the time you see this video on Wednesday, a lot of these might no longer be good moves, so don't be taking them based on what I'm saying here. This one, the volume is not quite as good, but it's still a good move up. GNL. This is not too good volume, and it's not very decisive move above the 50. Let's skip down here. Let's look at Iridium, IRDM. The volume is kind of wimpy, but it's a decisive move. ITT. Decisive move again. NEP. You see, this one's nice. Now I would want to see where this volume, if there's a lot of volume that went into pulling this trade back. So I would drill down to a lower time frame and check this out to see if this this pullback, if much of this volume went into the pullback instead of the push up, but so on. You can see that many of these trades here that I looked at today are already making their move. So let's see, that one that was pulling back might be a good one to look at for today too. Yeah, I think I might actually even like that better than the one I selected. Okay, I've compared these two, and one thing I noticed here is that this is stalling right at this resistance level and pulling back from that resistance level. So I think I still like the LITE better, because even if this thing does break, we've still got some space to get our stop move to break even before it stalls at this consolidation right here. Okay, what I like about this also is that it's making this move, it's staying below the 50, and the volume is not significant at all. So keep an eye on this thing. We want to see it close above the 50, and we want to see a volume spike here. I'd like to see it get up at least 75% of the average volume here to get into this, or a very decisive move above the 50. Taking the dream trades is simple, does require a bit of analysis, so just about 30 minutes or so before the market closes, take a look at the charts for all the calls in the Dreamtrades app and find the ones that have been trending in the correct direction. Also, you want to see a spike in volume on the breaking candle. For a buy, look for a candle close above the 50 SMA, and then your stop loss is 95% of the entry price, and the first target is 105% of the entry price. If the stock price starts going sideways, close it and move on. Take your equity and put it on something that's moving. When the price hits the first target, we're going to move the stop loss up to break even, and then we're going to target 5% higher on the stock. And each time the stock hits that new target, we're going to move the stop loss up 5%. So the stop loss will always be 5 to 10% behind the current price. Now I just want to clarify, the trade management of these dream trades is different from my normal trade pick strategy, because in the trade pick strategy we take some profit when the price hits the first target. That results in a lower drawdown, but it also results in a smaller profit when the trade runs. And that's our dream trade for this week. If you want more information about dream trades, just click the link below in the description box. And be sure to come back next Wednesday at 3 p.m. and we're going to start talking about technical analysis. That will be fun because that's one of my favorite things. Don't miss my Trading Picks videos on Fridays and Mondays right here at Trading Strategy Guides YouTube channel at 3 p.m. U.S. Eastern Time. Be sure to subscribe and hit the bell so you'll be notified when these videos come out. Have a great Wednesday, and I'll see you with a new trading pick on Friday.